ECB President Jean-Claude Trichet keeping the focus on governments to fix the debt crisis as he buys them time to ex budget deficits. After delaying the withdrawal of emergency funding, will this help quell the spread of turmoil to Spain from Ireland? And is there more to come? Joining me now to talk about this a little bit further in detail is Julian Callow, Chief Economist at Barclays Capital and also a member of the ECB, the so-called ECB Shadow Council. Good to have you here. And also Gilles Moec, Deutsche Bank Senior European Economist. Good to have you both on the show. First of all, if I may ask you first, Julian, what was your initial thought, initial reaction? Because what they actually did came as a surprise to many participants in the market.
Well, for me, I have to say it was fairly predictable, really. I think there is an element of consistency in the way the ECB is actually performing here. You could argue that it could be doing a lot more. Of course, it did actually intervene very significantly yesterday in the markets, and I think if it continues to do that level of intervention during the course of the next week or so, then things ought to be a lot quieter as people scrap their positions at the end of the year. So I think actually, yeah, the actual intervention in terms of the bond purchases that they were doing yesterday.
Was that the big surprise, or was it that they just kept on doing what they were doing anyway?
No, I mean, I think it was a little bit of a surprise that it was really quite serious, maybe at the kind of pace that we were seeing perhaps in June of this year, for example. And I think in terms of the communication, they were relatively consistent, really, and they do want to still remind governments it's very important to keep the pressure up there in terms of bearing down on fiscal deficits. So I think the ECB had a difficult communication challenge, and I actually think they handled it fairly well yesterday overall, I would say.
Phil, your take on it. We probably had two surprises. Some in the markets had expected that the ECB might maybe expand their bond purchases, and certainly many would not have expected that they would go out and buy so aggressively.
Yeah, we did not expect them to announce anything, drastic yesterday. It's anyway probably not the right time for them, because if they want to move to something absolutely mind-changing for the market, they would probably do so with some form of cooperation with the governments, and we're not there yet. But I think that what we've seen yesterday is another illustration of the ECB's tradition, of the European tradition to central banking, which is that you never pre-commit, and when you do something, you try to take the market by surprise. And this is to some extent what they did yesterday. If you come back to the tradition of monetary intervention by the Banque de France, or by the Bundesbank in the 1990s, this is exactly the way they acted. Yesterday, Trichet told us, beware that we are there. We could intervene at any time. So if you position themselves to try to hammer on the European market again, we will intervene, or we may intervene. And this kind of uncertainty that they've created in the market is really the European way to do things.
It is very interesting, because Trichet made a very clear point that they had envisaged actually just quoted, the Council had envisaged to return to auction mode instead of a full allotment. Let's quickly listen to exactly what his answer was to a follow-up question from Bloomberg reporter Gabi Thesing, who tried to get a bit more out of him what they were thinking ahead of time.
We decided, as we did, but we were not pre-committed for any of the two options. See, we had the two possibilities. They were, of course, obviously open. We decided, as you know now, to maintain this full allotment fixed interest rate.
The very clear body language here that they have thought about it very clearly. What do you think, Julian, sway the opinion towards continuing with those bond purchases? Because it's something they don't quite like, at least not the Germans, if you ask Axel Weber.
What we don't know is exactly how many people are opposed to continuing with the bond purchases, the so-called SMP.
He said there was consensus and a majority to continue.
Yeah, so the consensus means that there certainly were a few people who actually didn't want to go ahead with continuing the full allotment on the 3-month LTROs. And then there was the overwhelming majority on the bond market purchases. So I think really that they are still a little bit divided on this, and in a way it was quite a big deal. I think this is what Mr. Trichet was trying to say yesterday. It was quite a big deal for them that they did actually postpone the exit, and therefore they continued with the 3-month LTROs during Q1. In other words, they were oriented, although he subsequently then tried to deny that they were pre-committed, but they were fundamentally oriented in the mood, as he might say, to actually pursue the exit strategy. Now, this seems very much a nuance in the broader scheme of things, really. I think what dominated the market attention was the extent of the purchases in the bond market yesterday. And this is perhaps why the ECB is sometimes not so well understood, because it makes these quite incremental changes in terms of its operations. And you know, for the broader markets and broader opinion, when you see the Fed going in and saying they're going to buy $600 billion of treasuries, it seems like really a very minor aspect, I think.
Now, what's next, Gilles? Interesting movements behind the scenes. France, we learned recently, passed a law to use the assets in its National Reserve Pension Fund to pay off welfare debt. Maybe another downgrade for Greece. Spain trying to push for yet more measures when the finance minister had said, we've done as much as we could, so what's going to happen next? Will that aggressive buying, what we've seen yesterday, actually do something to sway investors to gain a bit more confidence?
I think that, well, what we need to have is a kind of cooperative approach between the ECB and the different nation governments, and we can see some of this happening. My take on this is that the ECB would be ready to go further in terms of purchasing bonds or doing...
So you think they might extend? They
might extend. I think that the message from yesterday was, you know, we are not autistic, we are more pragmatic than you think we are, and we could intervene at any time. And the problem for them is, if you come back to May, it's very interesting. In May, we had this press conference by the ECB on the Thursday, which was, you know, quite bland, so to speak. And everyone was saying at the time, you know, the ECB is not understanding just how serious things are. And then on Sunday, we know now that Jean-Claude Trichet took a leading role in convincing the Europeans that something had to be done. So I think we might see something similar if things continue to deteriorate.
More bailouts?
Yesterday.
Might we see more bailouts as well?
Yeah, I mean, you really can't. You can't rule out that. Look. Portugal is planning to tighten fiscally by 4% of GDP next year. That's a huge challenge. Yeah. The market's going to be scrutinising that, the unemployment rate, the performance of the economy. It's going to be very, very challenging for Portugal. Spain as well, of course, still there are concerns about the banking sector really there. So while I don't think you can guarantee that there are going to be bailouts here, the markets are going to be very alert. It's going to be a very challenging time during the course of the next 6 months in particular.
Indeed, but how is the ECB going to handle that? They've just showed that.
Well, I mean, this is difficult because, I mean...
What would you do? You're in the shadow ECB councillor.
I mean, I think the ECB's probably got it about right in my personal view, because they have to be wary about over-committing themselves to bond purchases here. Really what they want to say is, look, the real root of the problem is these budget deficits are too large. Governments have to cut them back. And the more the ECB, in a way, goes on a little bit subsidising things with its own bond purchases, when there is an alternative structure in place, there is the EFSF, there is the IMF there, then the more it just lessens a little bit the pressure on the governments to rectify things, which is really at the heart, in my opinion, of the crisis.
Yeah, the pressure from the ECB is that the EFSF might not be entirely thinkable for big countries, right? What we've seen in the last few weeks is that it started to be all about Ireland and Portugal, then it moved to bigger countries. Yeah. So Spain, I've always held this view as the means actually to pull through this on its own strength. If things get too difficult for them, I guess there will be extreme pressure on the ECB to do something here. The difference here is that it will have to be traded against something. And something that the ECB could ask, for instance, from Madrid is more action on the cajas, on the recapitalization, for instance.
I should throw in one thing that did not come up yesterday was the case of Eurobonds, and also there was very little mention of, say, political comments, for example, from the German Chancellor, from the EU Commissioner, although Jean-Claude Trichet tried to make clear that politicians also need to take their responsibility. How much of a disturbance does that create? And also, what do you think of the case of Eurobonds? Could that be a case? Real case?
I don't think they're ready to go there at the moment. I guess the ECB is very much alone at the moment. They are the only one with the firing power and the capacity to decide very fast to do anything. My hunch is that things have become a little bit discreet these last few days. Politicians are a little bit less vocal. It probably means that there are some talks going on here and there. But at the very moment, the ECB is alone.
There are some things you could do, like, for example, the European Investment Bank. I think you could step up further its ability to borrow and use that for investment projects in the countries that are suffering the most. And this would help these countries to generate growth and restore market confidence, countries like Portugal and Ireland.
Gentlemen, we have to leave it there. Thank you so much, Gilles Moec and Julian Callow.